What if the future of investing could be updated in seconds?
That's right. Artificial intelligence technologies like ChatGPT are revolutionizing how we approach finances, making insights accessible faster than ever before.
With experts like Stephan and Mark Thompson guiding the way, we've distilled their in-depth analyses into bite-sized summaries to save you hours.
Today, you will learn how government shutdowns could impact jobs, the risks in the housing market, and the trillion-dollar explosion of AI.
So get ready. This video is packed with crucial information to help you navigate these shifting tides. Today, we will explore how artificial intelligence, especially ChatGPT, is reshaping investment strategies.
Insights indicate that ChatGPT has the potential to enhance market evaluations and forecasts.
Experts highlight that AI can deliver insights, empowering investors to make decisions faster.
They believe ChatGPT's data processing capabilities distinguish it from older analysis methods. Analysts stress that AI can detect trends faster than human methods, aiding investment strategies.
Does this imply that AI could outperform experienced analysts in predicting stock shifts?
Indeed, especially for high-volume market data.
The debate around ChatGPT's potential to replace traditional analysts continues.
Some believe ChatGPT's real-time capabilities are beneficial, yet human insight remains important.
What can we expect from AI in finance moving forward?
Analysts predict that reliance on AI platforms, like ChatGPT, will rise, improving transparency and predictive capabilities.
In wrapping up, embracing AI tools like ChatGPT may be essential for competitive investors.
Understanding the evolution of AI will be vital for making informed financial decisions.
Today, we are diving into a critical analysis by Stephan regarding the imminent risks of a government shutdown.
Graham highlights the urgency of these discussions, as potential cutbacks could significantly affect the labor market.
Stephan emphasizes that a government shutdown could disrupt economic stability, particularly affecting non-essential government employees.
He discusses how historical shutdowns are often linked to heightened workforce anxiety and financial instability.
What specifics does Graham mention about job losses?
Graham notes that layoffs could commence swiftly after a shutdown announcement, particularly affecting federal jobs. Graham elaborates that the economic fallout from a shutdown affects more than just jobs. It also impacts local businesses reliant on federal funding.
This situation, he warns, could lead to widespread financial difficulties across various sectors.
What are Graham's predictions regarding the market if a shutdown happens?
He anticipates short-term market volatility and notes that lawmakers will likely face public backlash for their actions.
In closing, Graham advises viewers to prepare for potential financial impacts.
He recommends reviewing personal budgets and considering alternative income sources in the event of job loss.
Today, we are analyzing Mark Thompson's insights into the potential risks facing the housing market.
Mark warns that rising interest rates may significantly impact affordability and demand for housing.
Mark highlights that as interest rates increase, mortgage affordability becomes a growing concern.
He notes that this shift may push prospective buyers out of the housing market.
How does Mark see rising interest rates changing buyer sentiment?
Mark explains that higher rates diminish purchasing power, making homes less affordable.
This creates a more cautious environment for buyers.
Mark discusses inflation and its potential to keep pushing housing prices higher.
He emphasizes the need for buyers to consider inflation's effects on their purchasing decisions.
What predictions does Mark Thompson make for the housing market?
Mark foresees a cooling effect with potential declines in sales and housing prices this year.
Mark suggests that if interest rates continue to rise, we might see a decrease in demand for homes.
He also predicts uncertainty surrounding new home construction projects in this environment.
In conclusion, Mark advises that potential buyers carefully assess their financial readiness as rates rise.
He emphasizes the importance of being informed about economic trends when considering real estate investments.
Today, we are discussing insights from Bill McKinley on current opportunities in the equity market.
Bill stresses that adapting one's strategies is essential in a dynamic market.
Bill indicates that current market dynamics require changes in investor strategies.
Jim agrees, noting that adapting to market changes is more important than ever. Bill elaborates how responding to volatility could reveal new investment paths.
That's accurate. Successful investing often relies on adapting to market shifts.
Bill outlines that robust risk management is vital in our current economic climate.
He discusses strategies for minimizing losses and maximizing potential returns.
What is Bill's advice regarding long-term investment?
Bill supports maintaining a long-term vision even during turbulent market periods.
What does Bill forecast for the coming year in the market?
Bill predicts that mixed conditions will prevail, emphasizing adaptability for investors.
To conclude, Bill McKinley's advice underscores the importance of evolving strategies for market navigation.
Indeed, risk management and a long-term investment perspective can be foundational.
Today, we are diving into an analysis by Lynn Alden, discussed with Adam Taggart, regarding the risks of deficit spending.
Lynn Alden argues that our increasing national debt poses significant threats to future prosperity and economic stability.
Lynn Alden highlights that escalating levels of deficit spending indicate unsustainable fiscal policies that could undermine future economic health.
She emphasizes the risks linked with prolonged fiscal irresponsibility. Alden explains that as national debt accumulates, it may lead to higher inflation rates, threatening purchasing power.
Additionally, she notes that rising interest rates could inhibit economic growth. What does Lynn Alden predict if deficit spending continues unchecked?
According to Alden, we could face potential crises, including heightened inflation.
What are Lynn Alden's predictions for the economy over the next few years?
Alden foresees inflation rates stabilizing at uncomfortable levels alongside weakening economic growth.
In conclusion, Alden suggests that investors should consider alternative assets to hedge against inflation.
Personal financial strategies should be evaluated as rising costs become more prevalent.
Finally, it is imperative for policymakers to reassess fiscal strategies to promote long-term stability. Today, we are delving into the insights of Wall Street expert Emily Brown, who shares her thoughts on the rapid growth of AI technologies.
Emily highlights the incredible trillion-dollar potential in AI markets, reshaping investor strategies.
Emily Brown believes the AI sector is on the verge of exceptional growth, presenting a trillion-dollar opportunity.
This indicates that investors need to remain alert and prepared for swift market transformations driven by AI. Emily elaborates that AI is not just a future concept, it's actively transforming industries today.
This evolution opens up compelling investment avenues.
Emily also notes that despite the vast potential, the AI market may encounter fluctuations.
It's crucial for investors to understand these risks before entering the AI space.
We must also consider the impact of regulatory changes on AI investments, as highlighted by Emily.
She stresses the importance of staying updated on these developments for effective investing.
What are Emily's forecasts regarding funding in the AI sector?
Emily anticipates continued increases in funding for AI, forecasting a positive long-term growth trajectory.
Emily advises investors to remain vigilant about developments in AI technology.
Additionally, diversifying investments will be crucial to navigate this volatile sector.
Ultimately, insights from Emily Brown reveal both promising opportunities and risks for investors. Wow, there were so many insightful perspectives today.
Absolutely. Experts like Emily Brown and Lynn Alden tackled everything from the trillion-dollar potential of AI to the risks of government spending.
It's fascinating how they agree on AI shaping opportunities, but differ on exactly what that means for fiscal policy.
Right? I mean, while Emily's optimistic about AI, Lynn's more cautious, pointing out those risks to inflation and prosperity.
Then we had Bill McKinley emphasizing that adaptability is key in equity markets. Such a vital takeaway.
Exactly. And Mark Thompson really warned us about the housing market. If rising interest rates don't let up, homeowners could be in for tough times.
And Stephan's discussion on the impending government shutdown was a real wake-up call.
So true. It really highlights the volatility and uncertainty we face in today's market.
If you found value in these discussions, please give us a thumbs up and hit that subscribe button.
Join us next time as we explore global trade dynamics. Trust me, you won't want to miss it.
Thanks for watching, everyone. Stay financially savvy.